Welcome to Hiding in Plain Sight, uncovering investment insights in Earnings Call Diagnostics.
Hello.
This is the deep dive where we treat those sometimes dry earnings calls like a real treasure map.
Yeah, forget just the raw numbers, the dollar signs.
Exactly. We're decoding the subtler stuff,
Yeah.
how executives talk, the language they use. It reveals the company's true story.
Think of it like getting the cheat codes for understanding these big corporate players.
Right. Most people just grab the headlines, the EPS beat or miss. We're going deeper.
Much deeper. We're talking speech pattern diagnostics first, those hidden messages and how they speak.
Then we'll dig into sentiment and framing, what they choose to emphasize, how they spin the narrative.
And we'll look at what the analysts are asking, what they focus on. That tells you a lot, too.
All leading up, hopefully, to some unique investment insights you maybe wouldn't find just reading a summary.
And this time, our focus is on the recent calls from 6 giants: Apple, Amazon, Google, Microsoft, Meta, and Tesla.
Yeah, the big ones. And our goal isn't just repeating what they said, it's interpreting the how and the why.
Offering insights that, might actually be useful, whether you're managing a portfolio or just curious about these companies.
Okay, let's get into it. First up, speech pattern diagnostics. Reading between the lines.
This is fascinating stuff. We're listening for things like, evasiveness, uncertainty in their language, maybe even over-certainty, which can be telling too. Also, emotional leakage, hints of real feelings and conviction signals.
So these patterns, they can almost act like a corporate lie detector, right? Or at least a stress test.
Sort of, yeah. Evasiveness is that classic dance around a tough question.
Right. And linguistic uncertainty, that's the hedging, the cautious words.
Exactly. Over-certainty can sometimes feel like they're trying too hard, maybe masking something.
And emotional leakage, that's the good stuff, the genuine excitement or frustration.
Right. And conviction signals show where their real confidence lies. Okay, let's start with Apple.
Apple. Okay, so what did their words or lack thereof tell us? I remember the tariff questions.
Oh, yeah. When analysts pushed on tariffs beyond the June quarter, definite evasiveness.
Both Tim Cook and Kevin Parrish just said, point blank, they couldn't predict it.
And they said it repeatedly. That repetition felt significant. Like, we really don't know or don't want to say.
Yeah, it was almost like tap dancing, wasn't it?
It was. And that evasiveness often came with that linguistic uncertainty. Lots of difficult to predict, uncertain.
Specifically for tariffs, but also for Siri's timeline too, right?
Yes, for Siri as well. It's like, we're working on it, but timelines are tricky.
But then contrast that with the over-certainty around customer satisfaction, the installed base.
Oh, absolutely. Total confidence there. Highlight the positives, downplay the uncertainties. Classic playbook.
And did you catch any emotional leakage? Real enthusiasm?
Yeah, definitely. Tim Cook's tone when discussing AI and their sustainability work, you could hear the genuine excitement there.
That often points to where the real strategic heart is, doesn't it?
I think so. And conversely, strong conviction signals when they gave direct answers on current performance.
And explaining strategies for AI, sustainability, supply chain changes, they sounded very clear, very authoritative.
Right. Okay, let's switch gears to Amazon. What verbal cues did we pick up there?
Amazon seemed less directly evasive, maybe more subtle.
Agreed. Less outright dodging, but definitely linguistic uncertainty around those big external factors, tariffs, trade issues.
Yeah, and the timing for things like supply chain fixes or AI adoption.
Exactly. Phrases like, hard to tell what's going to happen, could change, continue to get better, those signal volatility, potential bumps.
But like Apple, they show that over-certainty on their core stuff, right? The customer obsession, low price.
For cows, yeah. Absolutely rock solid on those.
Yeah.
And very confident on long-term cloud and AI heart of what we're doing.
Felt foundational. And Andy Jassy, the CEO, any emotional leakage?
Oh, yes. Real enthusiasm, especially about AI and the new Alexa features. That top-level excitement matters.
It does. Drives things forward. And conviction signals.
Plenty. Repeated emphasis on strategic priorities, unwavering confidence in AWS. No doubts there.
Okay, moving on. Google. What linguistic breadcrumbs did they leave us?
Google was interesting. Minimal direct evasiveness. They were pretty upfront about headwinds, actually.
Which can be refreshing. Any linguistic uncertainty.
Minor stuff. Approximately may fluctuate in forward guidance. Pretty standard finance speak.
Right. What really stood out, perhaps, was the over-certainty.
Yes. Sundar Pichai on Gemini 2.5, very strong language. And Philip Schindler on growth metrics. They weren't holding back.
Projecting confidence. What about positive vibes?
Mm.
Emotional leakage.
Loads of it. Excited, pleased, proud. The leadership team painted a pretty optimistic picture. Look how well we're doing.
Okay, and conviction signals to back that up.
Definitely. Frequent use of specific metrics, detailed explanations. Felt like they had a good handle on the specifics.
Right, that transparency often signals confidence. Okay, Microsoft next. What were their patterns?
Microsoft? Well, Satya Nadella. A little bit of subtle evasiveness, maybe, around the data center strategy.
How so?
Instead of directly tackling potential oversupply risks, he framed it more as long-term adjustments, a neat sidestep.
Ah, clever framing. And Amy Hood, the CFO.
Used some linguistic uncertainty, phrases like roughly in line for certain metrics, leaves a little wiggle room.
The financial equivalent of a maybe.
Kind of, yeah. But then Satya was full-on over certainty, declaring cloud and AI essential inputs for every business. Very definitive.
That really hammers home their strategic focus and his energy on AI.
Oh, palpable. Just like Jassy at Amazon. Huge enthusiasm. Seems universal among these leaders right now.
It does, and concrete conviction signals from Microsoft.
Yep. Specific numbers on token processing scale, GitHub Copilot adoption, real data points backing the vision.
Good stuff. All right, let's untangle Meta. What did their call reveal?
Meta was a really interesting mix. We definitely saw evasiveness from Zuckerberg on Meta AI usage stats.
Right, very vague there.
And from Susan Lee, the CFO, on CapEx drivers and the EU regulation impacts. Felt like they were holding cards close.
Definitely. And did Lee show much linguistic uncertainty?
A significant amount, actually. On regulatory impacts, the DMA timing, Q2 outlook, hardware costs for CapEx, even looking out to 2026 CapEx. Lots of caution.
Wow, that's a lot of uncertainty flags.
It suggests a pretty complex horizon for them.
But despite that, Zuckerberg still projected that over-certainty about Meta AI's potential, right? And Llama 3.
Absolutely. Total believer in their own AI tech. That came through loud and clear.
And any positive emotional leakage from him.
Yeah, definitely some optimism, particularly on ROI expectations and just the sheer pace of the industry right now.
Okay, and conviction signals, where do they show clear confidence?
Specific metrics on the Ray-Ban Meta glasses doing well.
Oh yeah, they highlighted that.
AI model efficiency gains, positive attribution results, and strong strategic statements about business messaging and AI glasses. A clear sense of direction there.
Got it. Okay, last one on speech patterns. Tesla.
Tesla. Well, evasiveness around specific ramp-up timelines. Very characteristic reluctance to give hard dates.
Elon time, as they say.
Exactly. And lots of linguistic uncertainty using words like probably, I think, for future timing.
Suggests unpredictability, maybe managing expectations.
Could be. But then balanced by huge overcertainty in statements about future value, technical superiority.
Yeah, the usual bold claims on autonomy, manufacturing.
That unwavering confidence is core Tesla.
Did you pick up emotional leakage from Elon this time?
Yes, but more frustration, actually, talking about waste, fraud, the protests they've faced, a glimpse behind the curtain.
Interesting. But still strong conviction signals, too.
Oh, absolutely. High energy, super detailed explanations on manufacturing innovations, autonomy progress. His passion there is undeniable.
Okay, so pulling back from the individual companies, what's the big picture from these speech patterns?
Well, it's just clear that how they speak matters, doesn't it? The hesitations, the bold claims, the careful phrasing, it all adds color.
Yeah, the contrast between where they're confident and where they're cautious often highlights the real perceived strengths and maybe the hidden worries.
Exactly. Which leads us perfectly into our next layer, sentiment and framing.
Right. Not just the words, but the narrative they build and what the analysts are actually asking about.
What's the focus? What's being spun? Let's look at Apple again through this lens, analyst questions.
Heavily focused on tariffs, supply chain stuff, AI specifically, Apple Intelligent Services performance, and gross margins.
And the analyst's tone?
Mostly neutral, I'd say. Just trying to get clarity, seeking specifics.
Okay, and how did Apple management frame things, like those Siri delays you mentioned?
Ah, yes. Consistently framed as being about quality, meeting their high-quality bar, turning a delay into a positive commitment.
Smart narrative control. Okay, Amazon, what were analysts laser focused on there?
AWS growth and capacity, especially with AI demand booming. Retail sector stuff, macro worries, tariffs.
The usual suspects.
Yeah. Q2 guidance, and also the future of Alexa. Tone felt pretty neutral again, just trying to understand their plans.
And Amazon's framing.
All about that customer obsession.
Ah.
And the long-term AI vision. Those were the anchors for their responses, their North Stars. Makes sense. Google. What got the analysts' ears?
AI. That was dominant. But also advertising performance, rising costs versus investments, YouTube's trajectory, and cloud performance.
A lot to cover. And the tone from analysts.
Neutral to maybe slightly skeptical, particularly pushing on AI monetization details and cost controls, perhaps.
And how did Google frame their responses?
Very positively, really emphasized their AI model performance, strong growth metrics, projected that image of momentum and tech leadership.
Got it. Microsoft. Key discussion points.
Huge focus on AI and cloud demand, obviously. Then the CapEx needed to support that, Azure's performance overall, software efficiency, and macro impacts.
And the analyst sentiment towards Microsoft.
Seemed generally bullish, actually, but still probing, asking about the sustainability of that growth, the efficiency of all that spending.
And Microsoft's consistent message back.
Focused execution. That was the mantra. We have a plan, we're sticking to it, we're delivering.
Okay. Meta. What were the hot topics there?
Analysts wanted to know about practical AI applications, the huge CapEx spend, ad tech improvements, Reality Labs financials, those losses, and the AI models themselves.
A broad set of questions. Tone.
Mostly neutral, I'd say, just seeking clarity across all those ambitious and expensive initiatives.
And Meta's framing. How did Zuck and the AI position things?
Zuckerberg really pushed AI as the central pillar for everything, the core engine, while Susan Lai hammered home that efficiency focus across the board. Two sides of the same coin, maybe.
Interesting contrast. Okay, finally, Tesla. What were analysts keen on?
Autonomy, FSD, robotaxi, the usual big future bets, also tariffs, supply chain issues again. Optimus the robot.
Right.
Plans for cheaper models, and explaining that softer Q1 performance.
And the tone. Probing.
Yeah, neutral to probing seems right. Looking for concrete updates, rationale behind results and plans.
And Elon's framing.
Strong focus on manufacturing innovation as a huge advantage, and their leadership in autonomous tech, playing to their perceived strengths.
Okay, so looking at this sentiment and framing layer across all six, what's the takeaway?
It really highlights that strategic dance, doesn't it? Between what the company wants to talk about and what the market is worried about.
Yeah, the analyst questions often point straight to the market's perceived risks or uncertainties.
While the management's framing shows you their strategic priorities and how they're trying to shape investor perception, it's a dialogue, albeit a carefully managed one.
Which leads us nicely into our third area. Boiling down those analyst viewpoints, what was the overall consensus, the vibe from the experts on each company?
Okay, let's synthesize. For Apple, generally cautious on future tariff impacts, uncertainty there, but positive on the supply chain diversification. Optimistic long-term on AI, but wanting near-term clarity. Acknowledging strong services, but wary of regulations. And wanting more detail on margins.
So a balanced view, potential upside, but watching the risks closely. Amazon.
Cautious optimism on AWS and AI capacity and timing are key questions. Caution on retail, macro, tariffs watching operations closely.
Okay.
Inquisitive about Q2 guidance, especially costs, and still curious about how they'll really change user behavior with Alexa.
Again, a mix. Seeing the potential, but aware of the headwinds? Google.
Optimism about AI's potential, definitely, but seeking clarity on strategy and monetization. Positive on current ads, but aware of macro sensitivity.
Makes sense.
Cautious on rising costs, though acknowledging the efficiency drive. Optimistic on YouTube. Very optimistic on cloud growth and margins, but still asking about deployment timing.
So analysts seem to like Google's direction, but want more proof points, especially on AI monetization and costs. Microsoft.
Strong optimism on AI cloud demand, but wanting specifics on workloads. Some caution around the massive CapEx and supply management.
Right, the scale's huge.
Positive on Azure's strength, but interested in the non-AI parts too, acknowledging software's role in efficiency, and just an underlying awareness of the macro picture.
So a strong vote of confidence overall, but focused on the execution details. Meta.
Optimism on AI applications, but really looking for traction and monetization evidence. Accepting the higher CapEx, but wanting justification.
The show me the money sensing.
Exactly. Acknowledging ad tech improvements, but wanting quantified impact. Still cautious, maybe skeptical about Reality Labs losses, and interested in the technical AI progress and timelines.
A lot hinges on proving out those big bets, it seems. Finally, Tesla analyst views.
Cautious optimism mixed with probing questions on autonomy, Concerns and desire for clarity on tariffs and supply chains.
Still persistent issues.
Interest but probing on Optimus status and scale. Seeking confirmation and understanding of the affordable model strategy. And definitely concerned, wanting explanations for that Q1 demand softness.
Yeah, real mixed bag there. Excitement about the future, but real questions about the present and near term.
Exactly. So we've looked at speech, framing, analyst views.
Right. Now for the payoff. Connecting all those dots to find unique investment insights. The nuggets you might miss if you just read the press release.
This is where it gets really interesting. Let's start with Apple again. That explicit uncertainty about tariffs beyond June.
Yeah.
That's not just standard caution. It signals significant, unpredictable geopolitical risk. Investors need to factor that in seriously. Short-term margin caution is warranted.
Good point. Don't assume it's smooth sailing. Insight number 2 for Apple.
Their framing of AI as a core internal differentiator built into their silicon, that's a long-term strategic bet. Less reliance on others.
The Siri delays framed as quality control reinforces that.
Right. It signals a potential long-term premium positioning based on their unique AI integration.
And betting on themselves. And the third, Apple insight.
The deep discussion on supply chain diversification. It's not just cost saving, it's fundamental risk reduction, reducing reliance on single regions.
So it's about long-term resilience, reducing tail risk. Okay, Amazon's unique insights.
Jassy's excitement about AI, plus the talk of capacity constraints. It strongly implies AWS AI demand is actually outstripping supply right now.
It suggests.
Significant future upside as they build out capacity. Mid to long-term bullish for AWS AI.
Okay, that's big. Second Amazon insight.
Their maniacal focus on customers and low prices, even absorbing potential tariff costs. That's a strategic choice.
Prioritizing what?
Market share and customer loyalty over immediate retail margins. Short-term caution on margins, but potentially long-term resilience gains.
Playing the long game in retail. Third Amazon insight.
That historical context they gave on core cloud migration, the low-hanging fruit still available,
Yeah.
it suggests the traditional enterprise cloud business is still a strong, distinct growth driver for AWS, separate from the AI hype, a stable tailwind.
So multiple growth engines for AWS. Crucial point. Let's dig into Google's unique insights.
The detailed descriptions from Sundar and Philip about AI agents, the developer kit, enterprise applications, that points to a high conviction bet.
A bet on what specifically?
On AI agents becoming a major enterprise revenue stream. Embedding AI right into business workflows. Mid to long-term positive potential there.
Aiming to make AI truly indispensable for businesses. Second, Google insight.
And I'm mentioning that 19% growth in subscriptions, YouTube Premium, Google One, plus the focus on creators.
How does that signal?
Successful revenue diversification for YouTube.
Right.
Makes it less reliant purely on ads, more resilient, more predictable, midterm positive.
Makes YouTube a more valuable asset overall.
Yeah.
Third, Google insight.
The detailed cost breakdown, talking about moderating compensation growth, the broad efficiency focus.
Yeah.
It signals a genuine, deepening commitment to cost discipline. Could mean durable margin support, even as they invest heavily in infrastructure. Mid to long-term, positive potential for sustained margin expansion.
Managing costs while investing. Key balance. Okay, Microsoft's unique insights.
Amy Hood emphasizing CapEx flexibility timing driven by demand and workload growth, not rigid plans.
What's the insight there?
It suggests a smarter, demand-driven approach. Reduces the risk of massively overbuilding expensive data centers. Midterm, less oversupply risk.
Reassuring for investors worried about CapEx bloat. Second, Microsoft insight.
Amy also expecting AI capacity constraints to continue beyond June, even with their aggressive build-out.
Meaning?
Demand is just growing that fast, outstripping even their rapid supply increase. Suggests strong pricing power and high utilization for their AI services in the short term.
Significant advantage. Third, Microsoft insight.
Satya's point about software driving hardware efficiency, that 10x improvement claim.
Why is that unique?
It highlights a potential long-term differentiator. Better ROI on infrastructure investments compared to purely hardware-focused competitors. Their software stack is key.
Leveraging their software DNA. Got it. Meta's unique insights.
The strong early traction mentioned for the Ray-Ban Meta AI glasses. Zuckerberg's bullishness, lies metrics.
Could that be significant?
It suggests they might be hitting an inflection point. Could mean faster Reality Labs revenue growth, maybe quicker loss reduction than expected. Midterm positive potential.
A potential bright spot in Reality Labs. Second, Meta insight.
Susan Lee's detailed comments on accelerating ad tech efficiency driven by AI, quantifiable gains in conversions, user engagement.
What's the takeaway?
Their core ad business is getting demonstrably better, faster, thanks to AI, could lead to ad revenue beating guidance. Short to midterm positive.
AI directly boosting the core business. Third, meta insight.
Zuckerberg's control our own destiny line about building their own LLMs, plus lie admitting they struggle to meet internal compute demand.
Connecting those dots.
It underlines that the huge capex isn't just speculative, it's driven by strategic necessity and strong internal demand. Positions their infrastructure as a key long-term competitive advantage.
It provides crucial context for that massive spending. Okay, finally, Tesla's unique investment insights.
The high energy and detail around the unboxed manufacturing process, the cycle time targets.
What's the insight?
Strong internal belief that this is truly revolutionary, a key to unlocking unprecedented scale and cost reduction. Mid to long term, positive for scaling and margins if they deliver.
Seeing manufacturing itself as a core product. Second, Tesla insight.
The detailed explanation of their autonomy validation strategy, focusing simulation on those tricky long-tail events.
Why is that notable?
It suggests a potentially faster, more sophisticated path to unsupervised autonomy than just racking up real-world miles. Could accelerate FSD robotaxi timelines. Midterm positive potential.
A different approach to the autonomy challenge. Third, Tesla insight.
The conviction around vertical integration owning lithium refining, cathode production, framed as supply chain defense.
What does that signal?
That deep integration is a core strategy for resilience and cost control in a volatile world. High conviction bet on controlling their inputs. Long-term positive for resilience if executed well.
Vertical integration as a strategic shield. Okay, wow, we covered a lot of ground.
We have.
So as we wrap up this deep dive, what's the big takeaway for listeners? The final thought.
I think the main takeaway is just how much valuable information is hiding in plain sight within these earnings calls beyond the headline numbers.
Right. It's not just the financials.
No. Paying attention to the language nuances, the sentiment, the analyst focus, it gives you a much richer, more insightful picture, even if you're not a finance pro.
Absolutely. Learning to decode these signals helps you build a more informed view of strategies, risks, opportunities, makes you a savvier observer.
Which leads to a final thought for you, the listener. How might paying attention to these subtle cues change how you follow companies you care about?
Maybe next time an earnings call comes around, listen with a fresh perspective, not just for the what, but the how.
Exactly. Consider digging into some of the specific calls we talked about today. You might be genuinely surprised at the insights you uncovered just by listening differently.